Thanks, folks, for joining this session on a topic, something that is very close to my heart. Tanmay, am I audible okay?
Yes, yes.
Okay. I'll begin with a quick introduction. I joined ThoughtWorks, like Tanmay said, along with him last year. I have about 19 years of experience in financial services sector, worked in global banks in risk management and compliance, and that's where this passion for compliance and its impact on customers, on the ecosystems comes in from. And I've also worked in consulting firms for financial services clients, and also as a product manager for a suite of products related to financial compliance and transaction reporting. So quick context setting into this session. Then my next slide, please. So in my experience working with the regulators and as one of the, part of a bank, as the business which gets impacted directly, one thing I observed and realized was that the regulators' intent, right? Whenever a regulation comes in, or compliance or a guideline by an industry body, which they expect the businesses to follow, whenever they come in, the intent is actually towards the end consumer, towards the markets and the end consumer being impacted or playing in those markets. Whether it is to increase the transparency, enhance the customer choices, improve the access, or even if it is towards improving the risk management of a bank, it is for the benefit of the end customer. Many of us, we when RBI or SEBI, they release some guidelines, we kind of think that it is something complicated legal language for banks to deal with, nothing that impacts me immediately. But long term, these things, they do impact not only our experience, our expectations, but how we interact with the business players, getting direct impact of these mandates as well. The businesses, on the other hand, in a very tactical or a short-term manner, they find these regulations to be an imposed cost, an obligation, a must-burn dollar. When we look at IT projects, regulatory projects, they have to give out. It's a must-burn dollar. Rest all projects, they'll evaluate the business value or cost benefit analysis they'll do, but they can't do that for the compliance mandates. So it is an unbidden effort that they have to implement, process changes that they have to go through because regulators are asking them to. But in the long run, actually, when it improves the customer confidence or the way the customer starts interacting with you, if the businesses are able to harness or be able to evaluate or anticipate, they can actually make certain changes at an enterprise level to harness the benefit of that. And in this session, we'll see some of those impacts on customer experience and expectations, especially from an additional angle of the fact that the regulation or a compliance, when it comes, it's targeted towards a set of or a segment of customers. But it ends up impacting a broader set of customers. It ends up influencing the behavior of a broader set of customers, and which was more than that was initially intended by the regulators. And that itself should be a view that enterprises should keep in mind when implementing a regulation. We'll look at some examples now to hopefully that will make my point clearer. Tanmay, we can move forward, please. So first example I've taken is that of the Aadhaar as the central ID. We understand, all of us are aware of the pains we had to go through to get the Aadhaar cards made, the process, smooth or not, we had to go through that. And the compliance ask of this now touted as world's largest biometric system, the initial thing was to couple it with Jan Dhan accounts, utilize it as a financial inclusion measure to get the people, unbanked people, into the banking ecosystem or the banking foray. And the initial target was those people who were outside the formal folds of the financial ecosystem. But we all got impacted by the Aadhaar, the broader set to start with. Then the next set of intent was to align other IDs with it, not have so many IDs like a separate ration card, MNREGA, the DBT benefits. So Aadhaar was supposed to become the central nuclei for all these IDs to get aligned with and have a single reconciliation system for all these citizens. Now, how it impacted the customer experience and how it impacted the way businesses or enterprises started utilizing the facility because of changed customer expectations is very interesting. First and foremost, because it propelled a digital first KYC process for all the customer segments in the banking sector. Some of the digital efficiencies came in. For example, if you change a location now, like I recently moved from Gurgaon to Mumbai and wanted to change my addresses in the banks, it was really interesting. Many of the banks, now I just need to go online in their application and say, I want to update my address, and they will automatically initiate a process, confirm my Aadhaar number, and they'll fetch the KYC details that will have the address update because I have updated in my Aadhaar already. They will get the updated address, and I don't have to fill forms, give a self-notarized or a self-authenticated authorized copy of my address proof to the bank for the address to be changed. It was all at a click of a button because I updated an Aadhaar card, and that's all. All the banks can now source it. One bank, I think, asked me to upload a self-authorized copy of the address proof, and actually that was not a good customer experience because other banks had set a very smooth digital experience of address change basis on the basis of Aadhaar. Similarly, the personalized offerings that we now find, some find it annoying also, but we now find it as given, is those pop-ups that happen with respect to pre-approved loans by the banks. We need not have a credit history or a CIBIL score at times to get a buy now, pay later kind of offerings when we go and buy a smartphone on Amazon and stuff. Our previous purchase history will give them an idea of an indication of our purchase power, and Aadhaar, because they already have it, will give them the KYC that yes, we are authorized, authentic citizens and have an identity. All these new business models or innovative products that are coming in, Aadhaar is playing a key role, and it is becoming a regular expectation. Now, small amount loans are no longer, it is a risky product for the banks, but they are being utilized as a customer acquisition tool so that we experience that bank and go for a larger amount of loans with the same banks. So initially, while Aadhaar started as a financial inclusion or a biometric system, it has now made expectations with respect to banking digital processes to be more efficient. It has helped us, it has raised our expectations toward the kind of financial products we are being offered. And the target segment has become a more affluent segment where small loans are used to acquire us as the customers for those banks. Next example is actually a very, very favorite one of mine. This is a guide. These are, some of the guidelines, accessibility guidelines by a body called Web Accessibility Initiative. They look into how, like Aadhaar was about financial inclusion. WAI, their guidelines are about how web interaction could be more inclusive for people with disabilities, whether it's visual or hearing or motor or cognitive disabilities. And they are always coming up with guidelines on how to make web interaction more inclusive towards this targeted set of people. Now, initially, while these kind of guidelines probably were a checklist for visual designers, but again, they have elevated the customer experience or expectations to a certain level. For example, if you see the screen, the radio buttons, right? One of the guidelines by WAI said that for people with not so regular motor skills, clicking on a radio button is difficult. So why not make the whole write-up outside the radio button? Why not make whole of that clickable? So that guideline was initially for, to include people with motor challenges. But now all of us as users find this more useful, more easy to use than clicking on a radio button, which is, which requires very fine usage of the mouse. And now for visual designing itself, these standards have changed. the left-hand side is considered to be a good visual design as compared to the right-hand side options. And our expectations have become the same. If we go to a website and there are very tiny radio buttons which we have to find and click, we are, there's a certain level of irritation that comes in our mindset. If you have not noticed it, notice it next time that if you come across such a design, though it's unlikely that you would come across such a design. And there are many more such accessibility guidelines. This is just one example. Another interesting outcome of similar initiative was, Tanmay, again, next slide, please. Thank you. In 2012, for example, Netflix, right? They did not have those captions for their content. And there was a lawsuit that the National Association of Deaf, they filed a lawsuit against Netflix in US under the Disabilities Act, which they won against Netflix. And Netflix had to agree to provide closed captioning for their online content for the people who were hard of hearing. And at that point in time, probably Netflix also did not realize the impact of the cost imposed on them to provide that closed captioning. Now, all of us are able to see Korean dramas, or even forget Korean dramas, I mean, which requires some language translation. Not all of us are very comfortable with European accent of English or American English or British English, right? And many of us watch those movies with subtitles or captions. And streaming platforms gradually adopted these closed captioning and developed the AI models across multiple languages. And it became a selling point. It became a point of, differentiation from one streaming platform to another. And as a customer, our expectations of that experience have now become normal. We don't find it as a USP of one platform to another. It has become so normal that Zoom has now introduced live transcription feature, which was a premium feature. Now they're rolling it out in free version now, because without that, they will lose out the competitive edge. It has become so much in our expectation. If you see the screenshot there, I was speaking with a colleague of mine, and if I open the live transcription, I'm able to read what he's saying, whether or not, his accent is clear to me, right? So it has become such a feature that is now normal for our expectation, while in 2012, it was a legal process to get it, mandated onto a streaming platform. We can move. Yeah, thank you. Another example of the same is, related to open banking. Open banking, for many of us, is something we are reaping the benefits of that without even realizing that it's actually a fruit of a regulatory mandate that got originated in EU, in European region, and now being followed by lots of other countries. And the intent, again, there was a very consumer focused intent, wherein the regulators wanted user more control over the data that they had given to the bank, and basis that control, they also wanted more options, more accesses, more competition in the market for the consumers to happen. So basically, if your data remains with certain financial institutions or certain banks, you are relying on them to improve upon their services. But the moment your data is open, and that's why the term open banking, it started with PSD2 guidelines in last decade in Europe. The moment your data with your consent is available to more providers, to more players, they can come up with better services which probably the banks are not able to think of, or are not incentivized enough to think of, right? So new challengers, new fintech firms, once they have access to your data, they can come up with small services which benefit you. For example, account aggregation, as simple as that, wherein if given your consent, your banks will have to give your account information to a third party player, which will show you an aggregated view of all your accounts, or your financial situation. So that was what open banking regulations were. They endeavored to provide better ability to make better financial decisions, where you can have better access to your own financial data, cheaper services because enhanced competition, and we are no longer reliant on banks only to give us those services, and greater innovation, because otherwise, we are again relying on banks to think of new products and new services. Now, what happened while implementing this open banking regulations is naturally the players in the ecosystem had to think of the technology to implement this. API as a technology existed from long back, I think from 1940s. But the adoption got accelerated with open banking coming in because they needed a secure and fast way to share data quickly, flexibly, securely with third parties. And APIs was a quick way to do that, which again, was one of the factors for microservices architecture to come into play. Now, how that impacted the customer experience or customer expectations was that because the data was being shared quickly and securely with third parties, customers came to expect that performance or that reliability from all the fintech players, whether or not it was coming via a open banking system. So if I'm using a bank to do any of the transactions, I expect them to be as fast as a new bank like a Jupiter or a Paytm. I hold my banks responsible to the same standards of performance as the fintech firms now, right? Which work on accessing this data from the bank. And for that, banks has to up their games, right? Banks, they could not be left behind as incumbents. They had to implement these same technologies, adopt these same technologies for their internal processes as well. Initially, APIs were used to share data with the third parties, but now banks realize the benefits of these technologies and the expectations from them, and they used it to improve performance and reduce downtime from their internal processes itself. And new customer benchmarks got set up, and now banks are able to provide all those services to stay in the game that new challenges were providing. You can access bank statements from your smartwatches, you can do QR code payments from your banking system, you don't have to necessarily go to a Google Pay or a Paytm. And in fact, I mean, banks are becoming more than just banks. They are facilitating all the transactions, whether it's booking a movie or a flight ticket. They are giving all those facilities from within your banking apps. So it was a factor of not only just the tech advancements, as you see on the left hand side, but also how customers expectations with their experiences started getting elevated in terms of performance, in terms of what facilities they were getting as the outcome of open banking with the new challenges. I hope I'm not going too fast. We can move on to the next set of examples. So data security, again, we know that, there are data protection laws. In ThoughtWorks, we have a whole set of series. I mean, we can attend, if you're not doing it so far, a whole set of series where these data protection and other such legal laws that are coming in and impact the customer behavior, we are, going through on how, in a very layman manner, on how they impact the ecosystem. These laws in India that they are coming in, as well as other European and Western countries, they aim to protect the use of privacy, right? That's why data protection laws. And the need for it was sensed as now organizations are collecting, they are storing, they are even sharing and disseminating personal data. And that's when people started realizing that, their data is being misused. And it's a chicken and egg. You realize your data is being misused once you go through a harrowing experience, or also once you understand the laws, that you realize that, if a firm, a financial firm or any other e-commerce firm or any other firm which has access to your data, if they are not following the letter of the law, that means they are potentially misusing your information, right? So these laws also help in evolving customer awareness, not just their experience. And the customers then tend to push for greater security as well as transparency. For example, in I think last few months before a very big IPO, there was a firm, e-commerce firm, which because of a security breach, the transaction data got leaked out to not legal players, right? And the customers got apparently the customer care calls, fraudsters naturally, where they were able to cite their last couple of transactions, gain that confidence and ask them and give them some offers and give them a link that if you click on this link, you'll get those offers. And look, we are authentic customer care center of this firm because we are aware of your last couple of transactions that you did on that website. And there was, huge furor around it. Customers raised it in complaint forums and all because they were aware that their last 2 transaction data should not be with those people. Their transaction data, they can access only if they themselves call a customer care and ask for it. And they should not be, and naturally the company, the e-commerce firm, did not have enough security measures in place, and that's why that data got leaked and the company was pulled up, right? So customers now expect that they will be informed of data access that they're consenting to, that the company will tell them if they are sharing their data with the third party, and their explicit consent will be sought for that. Right? If we see there's a huge change in last 1 year because of data protection laws, that when you click on a website, it's not just FYI, the cookies are, if you access this website, we'll put in some cookies, right? There is always a button now of set preferences where you have more options, and you will be able to see those options and also be informed in layman terms on what data accesses you are consenting to. Tanmay, next slide, please. And because of this customer rightful desire to have option to accept or reject what cookies they want, we'll see these kind of screens popping up. And still this baseline is evolving. On the left-hand side, there is a privacy preference center kind of choices that come up where it is auto-selected. Even the performance or targeting, which are marketing-related cookies, which are not necessary cookies, right? All those are auto yes to an explicit, to a default disable, which is being followed in Europe, where you see all these are disabled and you have to manually give an explicit consent. Till then, the company cannot, use those cookies to target you as a marketing gimmick. And these baselines are still evolving. Left-hand side is where I think in, Asian countries are, and the right-hand side is where the European countries are with the data security expectations and laws. And we see how businesses are changing with that. There is a now very conscious efforts towards collecting zero-party data. What I mean by zero-party data is that when a customer, voluntarily provides a shipping information or contact information, or you collect their purchase data, that's a first-party data. You have to do that if you're on an e-commerce site and you want some shipping, some stuff to be shipped to your contact address. But if a company is asking a customer something about themselves, about their choices, what they like, what they don't like, what they prefer, if they are categorically asking about that, then that's a zero-party data. And companies used to have cookies and collect all this zero-party data, and now they have to ask consent for those kind of cookie informations. They are not strictly necessary cookies now. Businesses like Nike and Uniqlo are using this differentiation to actually go for one-to-one personalization. Now, initially, this zero-party data was used in a lot of AI and analytics models to categorize you in a certain behavioral segment and give you some level of personalization on what pops up as a recommendation on your screen. Because that is now basis your explicit consent, and you may choose not to give that explicit consent. Companies may not have that data. So Nike and Uniqlo are one example, are two examples of the businesses where they are actually saying, okay, we will not put in a cookie there. We will not collect that data. We will ask one-on-one. We'll ask about your preference and basis your own single preference. We will not cluster you in any analytics. Basis on one-on-one personalization, we will give you your recommendations or treat you as a premium customer. So basically getting the customer to share data willingly by giving them certain privileges or incentives, right? So they are creating communities where to feel part of a very select community, you will, might be willing to give your information because you want to be part of that very, very select community, or get those incentives which you'll get if only you give your data very willingly, right? So it is becoming a very one-on-one personalization. I think there was a question that popped up whether it will impact the hyper-personalization. And yes, it will impact it is already impacting hyper-personalization, the definition of it. I mean, hyper-personalization was where we were going deep and deep into a customer, cluster and their preferences, and hyper-personalization where it is actually a very one-on-one behavior will depend on how much information customer is willing to share. Again, the access to zero-party data. And with data security laws or compliance regulations coming in, like you can see on screen, right? Customer may explicitly say that I don't want to share my data with you. Or like you see on the right-hand side of the screen, where it is, by default disabled, you may not even feel the need to go and explicitly give that consent unless you are explicitly incentivized to do that, right? So the offering has to be more compelling for you to actually take that step of explicitly giving your consent.
Thank you, Mahima.
I hope that answered that question. Thank you. Then my next slide, please. Thank you. So this is kind of a summary slide where it is to, again, impress upon the fact that the intent of compliance is customer focused, about transparency, inclusion, standardization, competitive offerings, and how those intents as a customer focused enterprise, if any company wants to look at how they can think of, elements of customer experience within those. When we look at inclusion, inclusion is about more coverage in terms of customer experience, and we can look at a broader segment than the initial intended segment. We can look at the usability. If you think of, financial inclusion as a term, the target segment may need more user-friendly features, but they change the customer expectations, as we saw in the example of WAI or accessibility. The usability expectations change for a much more broader set of segment, and we can use it to differentiate ourselves for a broader set of customers if we follow the regulations. Same as with security and transparency. We can use it to build that trust. We can use it to incentivize and get that explicit consent and be more personalized in our offerings. When it comes to competitive offerings, right, be more cost effective or innovate with product service mix rather than follow the challengers as incumbents. We can use those regulations to think. When open banking came, banks actually started a forum and industry body amongst themselves to think what new innovative products can come, what kind of challenges do we anticipate. Before opening up their data, they started thinking in those terms, and many of the banks took the advantage of creating those platforms where they could quickly replicate new business ideas on their platforms. Standardization, yes, efficiency, performance, quick service, all these kind of regulations, which want banks to standardize their data, for instance. And sorry, I'm taking a lot of examples from financial services firms here, given my bent of mind towards that sector. But a lot of performance and quick service challenges are met because of those standardizations, which initially are taken as an obligation by the businesses. And again, it is a fact that we need to acknowledge that not only the impact of this customer experience or expectation is on a broader segment than the initially intended one, it also builds confidence in customers to engage with digital platforms. And it makes it essential for businesses to spend that effort and cost on customer experience, because more confidence customers have to engage in digital platforms, more efficient, cost effective, and obviously better for customer acquisition it is for the banks. Next slide, please, Tanmay. So this was till my last slide was on the topic, but there's a concluding thought while building all of this, examples. There was one realization that the important role that technology plays in all of this, or how compliance and technology, they mutually inspire each other, right? It's again a chicken and egg situation, what comes first. But for example, encryption technology, it kind of led the regulators to think of card on file tokenization, right? Before the breaches even happened. Cloud-based data services led to data security obligations, and it's not like the compliance, the regulators were not thinking in terms of data security, but it kind of, they were able to visualize on how it all could be interpreted and implemented by the players in the market, and things became a lot easier for everyone involved once they knew how the technology would enable it. On the other hand, the example that we saw for captions, right? In case of Netflix, there a legal mandate was the trigger, but then the AI-based models or the technology has become the facilitator, in the sense that it has helped that particular legal intent to scale, and scale much beyond the intent. It was initially for people who were hard of hearing, but now it has become multilingual. It has made the content accessible across the languages, because the AI-based models then went further than beyond the initial intent, and helped the intent to scale. So that was just the concluding thought on how technology also plays a role, and just having the regulations without the play of technology to actually help it implement or scale up will be much more difficult. But technology has helped it further, propelled it further, and improved the customer experience and expectations there. I hope that was helpful. Thank you for joining and listening, and I'm open for questions if anyone has.
Thank you, Mahima. Meantime, I'm sharing the feedback form. You can raise your questions if I'm.
Mahima, Anil here.
Yes, Anil.
First of all, thanks for having this session. This was really very informative. Some of the products that we are selling to the banks might be hyper personalization. Not sure if those gets implemented in this part of the world. Then I'm not sure about the cost that the banks are investing heavily on hyper personalization. One, assuming that the customer does not give that consent to have access to the data, right?
Right.
And second, I was just looking at one more, might be a basic question, is that now that most of the information is moving from on-prem to cloud-based services, in case of leakage of data, the bank is still responsible for the leakages, right? Not the cloud provider.
That is correct. So that is the premise of regulations, Anil. If you look at even things like transaction reporting and all, right? Many banks now buy off-the-shelf products or outsource it to third-party vendors, etc. Or data storage is one such bit. Regulatory reporting is another such bit. But the mandate or the responsibility lies with the banks. And I've been part of the conversations where when we say, our solution, reporting solution is cloud-based, so it is 99.7% available. And still banks are not happy of those 0.3% chances of leakage, right? Because they are the ones responsible. So that is there, yes. I mean, ultimately, they are the owners of the data. It is their prerogative where they may choose to, whether keep it on premise in servers or in CDs or in cloud. They are the ones responsible, and that's how they define the contracts, where they say that any leakage, you are liable to share the regulatory penalty with us, etc., etc. But from the regulator's point of view, banks would remain responsible.
Thanks, Mahima.
And even as a customer, you would hold the bank responsible if you find your data with a third party, or if you're, like I think Marriott, the hotel chain had customer data leakage, and their whole system was being managed by one of the IT firms, and still it was Marriott which had to bear the brunt of it.
Okay. So Mahima, still when we say 97%, that will be a smaller percentage when compared to managing on-prem, or is this figure higher than managing at on-prem? Like generally, what is the data security should be much more better with cloud providers rather than having at on-prem, right?
So not a technologist to answer that authoritatively, but yes, it was 99.7%, in fact, not just 97, depending upon how many backups you keep. But also when it comes to cloud, and we are slightly digressing, but please bear with me, is that it's not just about security, but also about the cost and performance, right? Because cloud, you are able to pay pay per use, or pay as you use. And also about the performance, because from the regulatory angle, again, regulators have defined, when it comes to data of historical transaction data, etc., from the banks, they say that, okay, for live transactions, if we have a query, any audit query for a transaction, you should be able to give us the transaction details within 2 hours or 4 hours. If it was a non-live transaction done 10 years back, give us the data within 2 days. And if it's a really dinosaur transaction, give us the data within, let's say, 15 days, right? Basis that also, banks take a call on where to store that data, because
sure.
how quickly can you fetch it becomes a criteria here.
Sure. Thanks, Mahima.
You're welcome. So I guess it was a short topic, quickly covered. And I'm hoping I didn't go too fast. There are many more examples. I covered mainly related to financial services because that's where my eyeballs typically go.
Okay.
Tanmay, it's over to you. Yeah.
Yes. Yeah, we were listening to Mahima. There seem to be no more questions. Okay. In that case, we can wrap up. Thanks, Mahima. The session was very insightful.